Ladies and gentlemen, welcome back to the Big Nez Bootcamp. Today we are going to be covering confluences on the chart, and in the next video we'll cover bias and put in the strategy all together. But today I really want to just focus in and dial in on what the confluences are. And if you don't know what a confluence is, it's basically just things in the market that you will use to execute your strategy. So for example, we'll break things down into steps like step 1, step 2, step 3, step 4, and then we would jump into a trade. So I'm going to be going down through all of that today, and what we're going to quickly do is recap what we went through last time. So last time, oh shit, come on, I got to actually bless you boys up here so you can see. Here we go. Right, so last time we covered assets, what they are, different things you can bet on, Euro US dollar, AUD US dollar, foreign exchange, NASDAQ, gold, oil, all different things that you can bet on within the market and play these strategies out on. We also went over candlesticks and what they actually are on the chart and the time frames we're actually going to be using. So the 5-minute chart, the 15-minute chart, and then the 4-hour chart. And then we also went over the difference between futures and Forex, which all it really is on Forex you are betting in lots, and on futures you are betting in contracts. And then we went down and showed live in the market live what the candles actually mean and what they are. But I'm going to quickly touch on this again in a slightly more in-depth manner. This is only going to take a few seconds. So a bearish candle is basically meaning that the market is going down. So it'll start here and it could have come up here. Then it comes down maybe all the way down to here and then comes back up and finishes off here. It's gone down. For a bullish candle, it's the complete opposite. We obviously start here, we could have come down here, and then we could have come up here, and then we ended up closing in that time frame. It could have been 1 minute, it could have been 5 minutes, whatever type of chart we're on. Yeah, we could be on the 5-minute time frame or the 15-minute time frame. And if this is the 15-minute time frame, this is what's happened in 15 minutes. So could have come down here, then come up here, then closed here. And what the actual coloured part of the candle is, so black or blue, is called the body. And the thing that's left behind is called the wick, the snail trail sort of thing. So then we also covered what a position is and what the visual representations are on the chart. And what I want to touch on now is something called R. And it's very simple. It's just the area that you risk. We obviously risk the same amount every time on each account. But the reason we call this R is because you may be executing, and you will be executing, on multiple different accounts and multiple different account sizes. So 10k accounts, 100k accounts, 50k accounts, live accounts. All of these could have different account balances, but we will always risk the same amount every time, our fixed amount on that account. So on a 10,000 account, we might risk 100. And then on a 100,000 account, we might risk 1,000. And we will just call that R, basically just to keep track of it when we are collecting our data in our journal. And when we lose a trade within the Forex strategy, we lose 1 R and we make 3 R. So this is an example of betting going up, and obviously this gets instantly taken out. So we would have lost 1 R in this situation. And then in this situation here, boom, we get tagged into a trade and it absolutely sinks down and we gain 3 R. So for the day, in this situation, we would be up 2 R if we took both of these trades on the same day. And here's a little touch just to show you what a journal will look like when you are trading. These are different variations of the model other than the mech. We could possibly go over these later into the bootcamp because I want to keep updating this bootcamp as time goes on and more things are going on and such. So we're going to go onto the charts now and we're going to break down our confluences. So the first thing isn't really a confluence. It's more just to set us up ready on the charts for the market open. What this is sessions. There are 3 different types of sessions in trading. You have the Asian session, you have the London session, and you have the New York session. How we mark these out is very simple. You make sure your time zone is set to London, okay? UTC London. That is at the bottom of the screen. I think it's actually kind of cut off here at the top, annoyingly, but it's literally at the bottom of the screen. You can set that to London. Then once you've set it to London, what we want to do is come up here, down 1, and we've got the vertical line tool. So with this vertical line tool, what we're going to do is we're going to mark out 3 times. We're going to mark out midnight, we're going to mark out 8 o'clock, and right now we are on the NASDAQ chart. And I want to drill this into your head early because I see a lot of advanced traders who have been trading this model for a long time, making this mistake. So on the NASDAQ, it opens at 14:30, 2:30 in the afternoon. Yeah. However, on Forex and any other asset, gold, oil, whatever it is, they all open at 1 o'clock, 1300. So what we're going to do is we're going to write this up on the screen so you lot can take notes. If you're not taking notes during this bootcamp, you're really missing out, and you're probably not going to retain all the information unless you've got some sort of photographic memory. So what it is 14:30 New York open on NASDAQ, and then everything else is going to be 1300, 1 o'clock, yeah? So that obviously just shows you right here that this part of the chart, this section here, is the New York session from 1430 onwards. That's the New York session. And then in the middle here, from 8 to 1430 or 8 to 1 o'clock, is going to be the London session. And then in here is going to be the Asian session. You guessed it. Well done. So that is the first session times. We've got the session times covered now. If you don't understand that, rewind the video and it should sort out that for you. And we're going to go back here. We're going to use the replay mode on TradingView. I'm going to go back to 8 o'clock in the morning to go over the next thing. So I am not going to jump into bias in this video. I'm not going to tell you what we're exactly looking for in a strategy. I'm just going to break down the theory of the confluences that we use. Confluences, as much as I shit on TJR, he explains it in a pretty well articulated manner. They are basically just building blocks that we use to build the strategy. So I'll give him props there. Fair play. So the first confluence we're looking for is called a sweep. Now, it is not very confusing. All we're doing is looking at the Asia session when we open up here. So, boom, it's 8 o'clock. And we are looking for either the highest or the lowest point within the Asia session. So here, that is our highest point. And here, that is our lowest point. So these two areas, well, lines, yeah, are our session high and low. So this is the Asia high and low. What I can do here, that I can make it even more simple. I can just bop Asia on here so you know. Yeah, these are the Asia highs and lows. Now, within the strategy, when we get into that soon in the next episode, we will only be looking at one of these. But for this example, I'm going to just have them both marked out and make it very simple for you. We're looking at highs and lows of the previous session, yeah? So, what we want to see for our first confluence is the high or low being what's called swept, which basically just means it's either being tapped or pushed through. So how we do this is on our chart here, you can click add, and you can, I can't do it here because I'm on the replay mode, but you can click add alert, and you can do this on the mobile as well, just by holding down onto the screen. And we're literally going to put an alert on the high or the low. And then once we put that alert on, we're literally going to put the chart away. We're going to put our phone away, and we're going to wait for that alert to go off. So what we're going to do is we're going to play this out here. Boom. A notification would have gone off on our phone or on our computer if we're on our computer. And that is step one done. That is our first confluence. So now we've had that confluence, we can now go back onto the chart. It might be a bit later in the day. In this case, it was only 15 minutes into the session. Yeah. And what we're going to do is we're going to wait for the first down candle to form because we've taken the high. If we had took the low, yeah, we would wait for the first up candle to form. So right here, we've had our sweep. I'm going to bring this back. We've had our sweep now. We are now waiting for that first downwards candle. Remember, if we swept lows, we are looking for the first upwards candle. Yeah. So next candle, boom, we get a down candle here. So when these sessions get swept, the market makers like to do a little fake out. Yeah, they like to move price back up there. And I'm not going to explain the theory too much. We're just going to go into the confluences because that's all you need to know to execute the strategy. So what we're going to do is we're going to get down here, we've got the fib retracement tool. So what we're going to do is, because we've swept the high, we're going to take it from the lowest possible point of both of these sessions, the Asian and the London, and then we're going to drag it to the highest point. Now, what you want to do, because when you do your Fibonacci tool, if you're following along, which you should be, you would have brought it from the bottom to the top, and it's going to look completely different to mine. So what you're going to do is you're going to go in here, and what I'm actually going to do is I'm going to change the color of this level to make it blue. So you want to have these settings engaged, yeah? So get rid of all of this. It's like when you're playing a game and you copy a pro sensitivity, it's the same thing. Just copy this down, and there you go. You got all these settings here, and when you're starting out, make the 0.079 blue so it's very clear to you as you are doing this. So now we have the blue line on our chart. So what I'm going to say is going to sound super simple, and it really is this easy, I swear to God. All you want to do is set a notification on the blue line. That is it. Yeah, set a notification on this blue line. This is called the fake out zone. Yeah, so this is our second confluence, the fake out zone. So we are now waiting for the fake out zone to be tapped. We're going to wait for the notification here, and it's instant. The next 5 minutes we touch the fake out zone. So that is step 2 done. Now, the next step is called a break of structure. And you might have noticed that I have a lot of these triangles on my chart. What you want to do is come up here into indicators, and you want to make sure that you have installed fractals. Now this is some crazy chaos theory technical stuff, technical jargon that we don't need to know about, but this has been back tested and proved on the data sheets, so we use it. Yeah, so searching fractals by Rachel T on the mobile, it's easy to find as well. You just click that 3 lines button, indicators, search it in, make sure it's hearted, and chuck it on the chart. So once it's chucked on the chart, this is what it should look like without. Once it's chucked on the chart, you'll have these little triangles pop up, and these are our fractals. So what we're going to do at this point, we're going to be slightly more proactive in the chart, because we're going to check it every now and then for a new one of these fractals to be formed. Because what has to happen now is a candle body needs to close through the fractal low. Yeah. So if I do a little drawing here, it would come down, and the body would close below the fractal low, and it would be done. It would be completed. The candlestick will have finished, the time's run out, and the new one's forming, and it would have closed the body below the low. So let's play this out and wait for that to happen. So there we go, look. Oh no. There we go, look, we've got another fractal here. So this is where you have to be slightly more proactive on the chart in this phase. I'm going to circle this one up. And I'm going to draw a line on it, like this. And then we are going to wait. Boom. So as you can see, exactly what I said there. The body closes below the line. That is the BOS, yeah? Break of structure. So we're going to label that up as our BOS. Now what we're going to do is we're going to use that exact same Fibonacci tool that we used before. And what I'm going to do to make things even more simple, yeah, is I am going to you can save these as templates. So if you come in here in this little drag down menu, you could save this as a template. So look, I could have fake out here. And what I can do is I can change the colored settings here so everything is black like this. And you just want the 1.025, make it red or something, whatever color you like. And then the 0.618 level, and make that red as well, or whatever color you like, whatever color you fancy, yeah? So as I explained in the last video, and I think I might have just covered it before, the short position and the long position, buying or selling the market, this is where it's going to come into play. And because we've swept the high, we are looking for a sell, yeah? So what we would do is we would put our position on the chart. Our entry price would go on this line in the middle, and our stop loss would go along this line at the top. And then what we would do is, like I said earlier, risk in 1R, take in 3R. So what we're going to do is we're going to drag our take profit level down until this risk to reward thing in the middle here, right about here, says free. Yeah, that is literally it. So now what we're going to do is we're going to wait to get tapped into the trade, which happens here. And then we are literally, once we've been tapped into the trade, we are going to throw away our phone, go nowhere near it, and we're going to just let the trade play out. And in this case, today, boom, we take 3R profit. And I know I said I wouldn't go through strategy, but there is an extra step which we're going to go over in the next session, which is called bias, which dictates whether we are looking for the high to be taken or the low to be taken, and dictates which way we're looking to go in the market, so buy or sell. So I hope that covered the confluences in a simple and easily digestible manner. And if it didn't, please leave a comment, because I want to just make this the most insane bootcamp ever. Easy to learn, easy to understand. Anyone can get it. And I hope you enjoyed. That's the Big Nez out. Bootcamp episode 2. Finito.